Yo, what's good, everybody? Welcome back to the final installment of Section 5, going over market structure. In the previous two videos, we really broke down the basics, talking higher highs, higher lows, lower lows, equal highs, and equal lows. And understanding that, if we're getting higher highs and higher lows, we're in bullish structure looking for buys. Lower highs, lower lows, we're in bearish structure looking for sells. And if we have equal highs and equal lows, we are consolidating and we are leaving the charts and staying the hell away from the markets. But just because we are in bullish structure, creating higher highs and higher lows, doesn't mean you just show up to the chart and you're like, shit, I'm buying, we're bullish, right? That's not what that means, okay? When we are looking for entries based off of market structure, we need to be patient and wait for one of two things. The first thing we can wait for is a thing called a pullback. Now, inside of this structure, there are two main components. There's the extension, which creates the higher high, and then there's the pullback, which creates the higher low. And then the extension creates the higher high, and then obviously a pullback would create the higher low. Now, all a pullback is a discount. For example, you don't want to be getting in, at the highs. Let's give you a good example here. Let me draw this real quick. So you don't want to be getting in, let's say this represents the cost of a t-shirt. The red is $20, okay? You don't want to be buying in, at $20. You don't want to get the t-shirt at $20 if there can be a pullback for $15 or $10, right? You would rather get this discounted price knowing that the overall trend for this t-shirt is bullish. Everybody wants this t-shirt, right? It's a big time brand. Everybody wants this shit. It's only going up. The trend is up. Everybody wants it, right? There's a high demand for it. Okay, so it's going to go up, but you don't want to be buying in at 20 if you know you can get it for 15 or 10. You know what I'm saying? So you want to be patient for these pullbacks, and when these pullbacks happen, those are entry points. Now, when I'm talking about entries, guys, I'm not going to go into, very in depth on, candlestick confirmations and higher time frame correlation and all that stuff right now. That'll be later in the course. But for now, I just want you to know that when trading market structure, there are two main optimal entry points. Now, keep in mind, every trade that I take is based off of, these basic elements of market structure. And I simply don't take trades, if there isn't a certain element of structure involved. So following up with that, if you're looking at a bullish trend and you're thinking, well, if I can't just press buy, then when am I looking for entries? The first one, obviously there's going to be two types of traders when there's trending conditions. There's going to be the break and retest traders, okay? And then there's going to be the breakout traders. The break and retest is represented by the blue box. Breakout is represented by the black ray. So the break and retest. So you have a extension that breaks the previous highs and creates new highs. And then they're waiting for a pullback and retest of the previous highs. That is a break and retest trader. So you're waiting for this pullback to create a lower high. Obviously, there's a lot more that goes into it. There's more confirmations and whatnot. But then your stop loss, you can be a much tighter stop loss and a better risk to reward because you are protected by structure, ideally. Okay? And another way you can get in this trade, this exact same move, another way to get into it is called a breakout trader. So all you're doing is trading the breakout of the highs. So your entry would be on the breakout. Once we break the highs, we're getting in. I'm breaking out. Okay, that's the idea. Those are the two types of trades, or two types of opportunities you can be in. You can either wait for the pullback or you can wait for the breakout. But remember, you don't want to be in right here. Okay, right when we create the new highs. Why is that? Well, for example, let me delete this and I will show you guys why. You don't want to get in at the highs, which are now right here. You don't want to get in these new highs. Why would you not want to buy in right here? Well, for example, your stop loss is going to have to be massive because remember, when we set our stop loss, we want to set our stop loss in a place that if it does get hit, it invalidates the whole trade anyways. We don't want to be in there. And now, this trade is always going to be valid unless we break what? The last significant higher low, which is all the way down here. So if we're getting in here and our stops are all the way down here, our risk to reward is going to be dog shit, okay? Because the market can pull all the way back to here and still be valid for buys, okay? As long as it doesn't break the last significant higher low. So why would we get in up here if we can just be patient and wait for a pullback because then if we wait for this pullback, now our risk to reward, instead of being, our stop loss being all the way right here, a 360 pip stop loss, why would we do that when we can get in right here on a pullback and our stop loss literally be 130 pips? Just for this example, obviously, it's much different if you wait for that pullback, or like we said, you can be a breakout trader, and once you have this lower high confirmed and price starts to travel up and we're on the verge of breaking out, right when it starts to break out, that could be an entry. And now, knowing the key factors of market structure, our stop loss doesn't have to be all the way down here, because we know that we're creating new highs. And what happens when we create new highs? The last significant higher low raises, so then our stop loss obviously shrinks, and so on and so forth. So I hope that makes sense. Those are the two ways you can get in on a trend. Now, obviously, if it's a bearish trend, you just flip it. I mean, it's the same concept, same shit. You're getting lower highs and lower lows. There are two main entry points. You can either be waiting for the pullback or trading the breakout for new lows. So you can either be waiting for the pullback for the new lower high to enter, or you can enter off the breakout of the lows in anticipation that we will form new lows, and then your stop loss can be under the last significant lower high. So those are the two ways that you can really take trades based off of just structure. Now, obviously, as we go forward with this course, we're going to go more in depth on things that factor into it, such as support and resistance, your supply and demand zones. And then you have time frame correlation and candlesticks and market patterns and all kinds of stuff, right? We're going to dive into all that, but for now, just focus on the basics of structure. Now, the next thing I want you guys to understand is there are trends inside of trends. What do I mean by that is, on the daily, you're going to have a trend, and then that trend might be different than the 1 hour trend. And that's why I always tell you, the daily trend and the 4 hour trend matters more than the lower time frame trends, such as the hourly and 30-minute. And I'm going to draw you up some examples, and then I'm going to explain that within the next 2 seconds. So now what I have drawn here is a representation of kind of what I was just talking about. So inside of this right here represents daily time frame. So as you can see, the daily is bullish, okay, because we're creating higher highs and higher lows and higher highs, right? But inside of this one leg extension on the daily that is creating a bullish trend, we can look over here, and maybe on the hourly time frame, that is represented as, sure, it's bullish, 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 but then structure. So from this point right here, this is the higher high and this is the higher low. We broke through the last significant higher low. That means this section, right through here was bearish, okay? So, but inside of this same leg, this same extension, I hope I'm not losing you with this, the inside of this same extension leg where the daily's bullish, for a time, the hourly was represented as bearish. So there are trends inside of trends, and that's why it's very important to pay attention to the overall daily time frame, because what you're going to realize is, you're going to have these counter trends inside of the main trends. And another thing that you're going to see is really anytime that there's a daily pullback, so right here, this section, anytime there's a daily pullback, you're going to see like the 4 hour and the hourly, they're all going to flip and probably going to go bearish for the time being while it creates this pullback. While the overall daily trend is still bullish, the 4 hour and the hourly are bearish, okay? And then it's a counter trend, and counter trends produce pullbacks. So just understand that whenever you're looking at the lower time frames, that you're going to see a lot more structure flips, which we already know, but then you need to pay attention to the higher time frames, because that's where the true trend is, and that's how you capitalize on these the bigger moves and the more sustainable moves, and put yourself on the safe side. That way you're not putting money at risk that is just not smart. So understand that those different types of market conditions, kind of what you're looking for inside of those market conditions, and then ultimately you got to be trading with some type of market structure into your everyday trading plan. Like I told you guys, every trade I take is based off of some market structure component, whether it's break and retest, I'm entering here, or a breakout entering here, or maybe it's a good old fashioned structure flip. There's another way here's how you can trade structure flips, man. You can wait for the break and retest. So obviously we have a higher high, higher low. We broke that, went to bearish. So you can either, there's two ways to trade it. One, you can be in on just the straight breakout of these lows, because we know that if price breaks through the last significant higher low, there's a good probability that we create lower lows, because structure would be flipping then. So you can either enter on the breakout of the last significant higher low, or you can wait for the break, the creation of the lows, and then the retest, the break and the retest. Okay, so you can wait for that pullback and then wait for that extension. So then your entry can either be the breakout or the break and retest. Obviously, stops would go above the last significant lower high, because, like I said, structure now flipped to bearish. This created the lows. This is the last significant lower high. If we're entering here or here, our stops need to be protected. And the only way we protect our stops is by putting them in a place that if the structure, if it did like something like this, then the trade is bullish and we wouldn't want to be bearish, or we wouldn't want to be selling anymore. Does that make sense? So we're putting our stop loss in a place that if it hits this, it invalidates the trade. I don't want to be in the trade anymore. Okay? But like, we don't want to have our stops, in a place like something like this where, if it hits it, we could still be bearish. You know what I mean? Like we're still in bearish conditions because we've created lows, last significant higher low. We're bearish unless it breaks that. That's why our stop loss is to protect us. And if it gets hit, then we don't want to be in that trade anymore. But there's a higher probability of, market creating lower lows based off of the fact that we just made a lower low and a lower high. That is, market structure, to a T, and kind of what we're looking for. I hope this really helped, and we're going to dive into, some more advanced stuff as we dive into more of these sections. With that being said, guys, I hope this helped, and I will see you guys in the next one. Peace.